CEO of Tax Time Express Tax and Business Services. I specialize in all things tax and business. My reason for being here today is to tell you or explain to you the importance of having your taxes filed properly, especially when you're buying a house. Have you heard the saying of how do you look on paper? Or you might have a whole bunch of money, but once you go to the lender, they're gonna look at your tax returns and say, oh, no, you don't. So if you're going to, I'm not gonna feel good, but if you're going to a professional tax person, the first thing they should ask you when you sit down with them is, do you plan to purchase a house in the next 1 to 2 years? The reason they're asking that is not necessarily to get in your business, but to make sure your return is reflecting that. The reason I say that is because you go to some people that their main goal is to get you money back. Everybody's not gonna get money back.
Amen.
So if they're writing off all of this stuff, if you go in there and with $75,000 as income and they write off 50, when you go to Lisa, she's gonna tell you you can't afford the house. And you're gonna say, well, yes, I can because I make $75,000. Again, what do you look like on paper?
Right.
You know, that's what makes the difference. And it's sad that you were thinking that when I give my paperwork to this person, I told them I'm buying a house, so they should know what to do. Normally, or if you come to me, but normally, but you have to be on top of that, because the reason I say that is you get some people that'll say, well, you're buying a house, it's okay, because they wanna just get you money back at that time. It's okay that you're buying a house, what you can do is before you buy, just go and amend it. That's not gonna work, because then by the time you get to the lender and you say, oh, well, I'm gonna amend it, that's gonna take time. The IRS is gonna take time processing it, it's gonna take time to update on the transcripts, and then by then, they're on to the next. It just takes a lot of time. So if you do it right the first time, you don't have to worry about that. Now, let's just say you are and I don't think it was no 1099.
No 1099?
But I did an example, it's in the page behind my bio. This is an example, whether you're W-2 or 1099 or both, of what it looks like when they write off too much debt. So,
What about nurses? Is nurses in here?
travel, just regular nurses?
Yeah, just regular nurses. Sometimes I know their income can be shaky, right?
Yeah,
Okay.
yeah. Normally, what I've seen is normally travel nurses that have that issue because they are 1099 and W-2, and on their 1099 portion, they write off a lot. So what I wanted to say is, if you are somebody that is a business owner, but you're trying to purchase a home, I don't want you to feel like, oh, I don't get credit for all those deductions. You have to tell yourself, what is my main focal point? Is it, I want this house now, I can worry about the tax debt later, but I want this house. So if you make a lot of money and you're coming in and we tell you, well, we can't write off much because your lender needs to see X amount of dollars, it may result in you going IRS. However, if you pay taxes like you're supposed to during the year, it may not. But it may result in you going to IRS. So at that point, you will have an IRS debt, and you can speak with your lender on how that will affect the process. But you may have an IRS debt at that point. Once you buy your house and you do have legit deductions that should have been written off, you can then amend that tax return and add those deductions then. But do not let anyone tell you, oh, let's write it off now and then amend it later. Do it the other way. Do it the right way first and then amend it later. If you have the legit expenses in the first place. So, one of the things that I do wanna point out when I'm saying write-offs, if you're just a full W-2 employee, then this doesn't apply to you. Write-offs usually come in when the business expenses are deducted from your main expenses. So if you are a W-2 employee, it is still important that your taxes are done correctly, because sometimes because you're a W-2 employee and you make too much and the person sees you're not getting much back, they wanna throw a Schedule C on there to remove debt. And then when you go buy the house, they ask you, well, we see you have a business, and you're like, no, I don't have a business, but the preparer put it on there because they wanted to get your money back. So if you know that Normally, I really don't get money back, but this year I'm going to somebody new and they're giving me back all of this money.
Oh, okay. I wanna say something, I'm sorry.
No,
And that's really important because there's some down payment assistance programs that, that we look at that require, in order to verify your first time home buyer, because sometimes there's a lower rate on, first time home buyers, or if you're in a certain area. And the way they verify that you haven't owned a home before, they get your taxes for the last 3 years. And if you have somebody that's just filing a business or something for you, then that, if there's not a profit on that business, if there's a loss on that business, that loss is gonna count against your income. So you have to be very careful and mindful of just claiming the business just because somebody says, oh, girl, I can find a business for you or whatever, so you have to be mindful of that.
Exactly.
Mhm.
So.
Sorry.
Oh, no, no problem, that's good, that's really true as well. So, the thing is, be mindful of, first off, be mindful of who's doing your taxes, and be mindful of that. So like I said, if you're going somewhere, and it's a shame that you have to worry about that now. Normally, you can just go to the tax pro, tell them your situation, and they do it, but now, this industry has become so cutthroat, so much fraud and all of that. You have to be mindful on what's on your tax return. So how to know that, if you know you don't have a business, but when you're looking through your paperwork after you leave your tax pro and you see a Schedule C, they have put a business on there.
Wow.
And did y'all hear what she said? I have ran across 2 people in the last,
Fraud, I have literally 15 files on my desk from other preparers that they put all this stuff on these people's returns. Now the IRS is like, you know what, we know you didn't qualify for this, but what we're gonna do, we're gonna allow you to fix it before we charge you this $50,000. We're gonna allow you to fix it, and it's fixing the stuff that I see, fuel credits and all this crazy stuff. So just know what is on there, and again, every page should be, you should have every page, from the front page to the worksheet. I had a new client last year that told me I made her nervous because I gave her a 60-page tax return and she's never got more than 2 pages. Wow. Well, I say, well, if you've been skipping this, you should have had more than 2 pages. So you need to figure out, pull your transcripts to see what's on your tax return, because then when you go by and they tell you, oh, this is that, the first thing you're gonna do is go back to that person and they're gonna like, oh, well, I can't help you. So make sure it's done correctly the first time, and if that person is not forthcoming on answering those questions or explaining why you have a Schedule C when you know you don't have a business, that's just not the person that you need to be going to. Are there any questions so far? Oh, you, no, okay. So basically, again, pay attention to what's on your tax return, and I know that's not something that, you know, you can look at this and be like, oh, this is Greek to me, how do I know if it's done right or not? But stuff is kind of common sense. If you know that you make $80,000 a year and you go exempt most of the year, and when you go file, you get 10, 15,000, it's fraud. Okay. So, if you look through your paperwork, and like I said, I have one in here, if you look through your paperwork and you see adjustments to income or Schedule C, and you know you don't have a business. And when I say business, if you do something like Uber, if you do Lyft, if you do DoorDash, if you do any of those things, you will have a Schedule C, because those are considered businesses because you're a contractor. So if you do something like, if you tell your professional that you do cooking on the side or you do catering, those are considered business. I don't want you to think I'm saying business, and it means you have to have your LLC or a building, or if you do things on the side for cash and you have communicated that to your tax professional, then you will have a Schedule C.
and it's important that you do, if you wanna buy a house, and you do something on the side, you gotta show income.
Yes.
File those taxes. I've had, me and Lisa always talk, oh, they have a daycare center that they just started 6 months ago. She can't use her income. It has to be 2 years.
Self-employed is 2 years.
2 years.
And 1099, 1099 is 2 years as well.
Yeah, 1099 is 2 years. So if you have something on the side that you guys are doing, unfortunately, good thing, bittersweet, right?
Yeah.
You need to file it, but it shows income. so you can use it to buy a house. Okay? 2 years.
So I'm gonna wrap up with saying, pay close attention to your tax return. If you need a legit tax pro, I'm one. And if you have questions at the end, I will be sitting in the back. And this is not a plug, but let me just tell y'all, you cannot get a better team than them two. I really prove. When I say smooth from A to Z, the kinks, they probably worked them out, but you will never know most of the time what's going on. Perfect team.
Thank you.
So, that's my time. Thank you all again for listening, and we're gonna, the next person, oh, you go. Okay.